Ladies and gentlemen, hello and welcome to the Value Line webinar series event entitled One Stock to Buy Right Now. With that, we invite you to sit back, relax, and enjoy today's presentation. I would now like to turn the call over to your speaker for today. He is the Director of Research at Value Line, Mr. Ian Gendler. Sir, you now have the floor.
Today, using Value Line's digital platform and investor tools, I'm going to show you how to quickly and easily find worthwhile investment candidates. Going further, I am going to recommend one stock to buy right now. After the presentation, as mentioned, we have allotted time for questions and answers. Also, if you would like to revisit this presentation at a later date, it will be posted on valueline.com and our YouTube channel within the next 48 hours. Lastly, as an added bonus, attendees will have the opportunity to receive an additional stock recommendation. I will provide details at the end of the presentation. To start, for those joining us for the first time, I want to provide a brief overview of who we are at Value Line. We are a New York headquartered corporation that has been providing investment research for more than 85 years. Our flagship product is the Value Line Investment Survey. This service is a unique source of financial information and is designed to help investors make informed investment decisions that fit their individual goals and levels of risk. The product includes data, information, and analysis on more than 1,700 equities that trade on the New York Stock Exchange, NASDAQ, and Toronto Exchange. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and much more. This service, which is published weekly, is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. Our research is completely unbiased and independent. Unlike many Wall Street brokerage firms, Value Line has no investment banking business with any company, including the 1,700 that are included in this service. Value Line does not execute trades for its subscribers, and therefore has no vested interest in whether our subscribers buy, sell, or hold a specific equity. What's more, our staff of professional securities analysts are not permitted to own shares of any company that they cover. As a jumping off point for our stock search, let's start with an overview of the economic situation, as well as the Value Line Research Department's view of the stock market. This is especially important since the market has been quite volatile of late. The following content was prepared by Harvey Katz, Value Line's chief economist. The economy is stumbling out of the gate this year with a painful government shutdown, a sudden drop in existing home sales, and a marked downturn in consumer sentiment behind much of this early 2019 slowdown. Of course, the big story has been the shutdown. It was well into its second month and subtracting more than 0.1% from GDP each week when a 3-week truce for the government to reopen went into effect. So, even without a material weather impact, first quarter GDP, once forecast to increase by 2% or more, may now show somewhat less improvement. Some relief could be on the way. First, there's the Federal Reserve. Earlier, it said several interest rate hikes might be forthcoming this year. Now it is suggesting a more patient approach. Also, China and the United States appear to be making at least some progress toward reaching a trade deal. So if there are no further government shutdowns, GDP growth may move back into the 2% to 2.5% range. Meantime, earnings season is living up to expectations, with many more positive than negative surprises. In all, more than 70% of the companies reporting so far have exceeded earnings forecasts for the recent fourth quarter. In all, expectations are that earnings will show a 10% or so gain for the quarter. True, that would be a smaller rise than in recent periods, but it still would be respectable given the advanced age of the business upturn. Meanwhile, the bulls are back as they are pushing stocks higher once again after a sharp sell-off late last year. At that time, worries about high PE ratios, slowing earnings growth in 2019, and rising interest rates took much of the bloom off the investment rose. Clearly, a calm hand on the wheel is proving to be good policy, especially as the bull market continues to evidence impressive staying power. Now, with cautious optimism developing on the trade and government shutdown fronts, and with a suddenly more patient Fed back in the picture, equities could be poised for further gains. In conclusion, we think investors are best served by emphasizing stocks with steady earnings growth, strong fundamentals, and rising dividends backed by secure payouts. I agree with Harvey's view, and his conclusion sounds a lot like the basis for a quality stock search. Thankfully, Value Lines provides the tools and information to incorporate such factors into an investment strategy, which we will tackle in a few moments. For now, however, please note that we are currently on our homepage, www.valueline.com. On this page, free of charge, you can access daily market commentaries and analysis, as well as general interest articles that are written by our research team. Examples of such content are analyses of economic releases and quarterly earnings supplementary reports on the 30 components of the Dow Jones Industrial Average. On that note, we are in the heart of fourth quarter earnings season, so I suggest that you monitor valueline.com for data, information, and analysis on these reporting companies. I'm now going to sign in with my username and password. After entering my credentials, I am now taken to the welcome screen. From here, I can quickly get to many important areas of our website, including Browse Research, which is the main home for our core equities products. I can also head to our home pages for our monthly stock selection services, as well as our investor tools. As you know, the point of this presentation is to find a stock to buy right now, so let's go to the screener and get started. This tool can also be found via the Find Ideas tab at the top. Subscribers have access to more than a dozen preset screens, as well as almost 50 fields. I should also note that the screener possesses more than 200 fields in total, but those are only available with higher level subscriptions. I am now going to run a screen using much of the information that Harvey provided. Let's start with earnings growth. First, I click on the field EPS growth 5 years. This will display the historical growth rates of earnings per share. I'm going to set the minimum value to 12%. I can also complete this task by using the scroll function and click filter. History is important, but I want to also incorporate forward-looking EPS growth. This is a good time to mention that for all 1,700 stocks in the Value Line Investment Survey universe, we create 3 to 5 year financial projections. I want to highlight that Value Line is one of very few research houses that provide financial projections that far out. We think that these estimates are of great value to our subscribers since they show a long-term trajectory of the company. So for projected earnings growth, I'm going to also set the low limit to 12%. Harvey next emphasized strong financials. Thus, I'm going to focus on the strength of the company's balance sheets. There are several ways to do this, including evaluating cash on hand, debt levels, etc. However, Value Line incorporates all of this into one proprietary metric, a company's financial strength grade. These grades range from C to A++ in 9 steps. Since I only want to focus on the strongest ones, I'm going to add just A++ and A+ to my screen. For those that are interested, B+ is average. Okay, we're down to 21 stocks. We're making solid progress. Now to dividends. Like the earnings fields we already utilized, I can isolate stocks that have meaningfully increased their payouts over the past 5 years using the dividend growth 5 years field. I'm going to set the lower end here to 15%, which is admittedly a lofty percentage. This will help us zero in on companies that have been aggressively funding their payouts. 10 stocks, which is nice and manageable. Going further, scanning the list displays an impressive group of market leaders. Most, if not all, in my opinion, would fit nicely in a great percentage of equity portfolios. That said, after evaluating the list earlier today and consulting a number of members of the Value Line Research Department, Home Depot, ticker HD, is the one stock to buy right now. Before I dive into HD, please note that screens can be saved and revisited later by utilizing the button at the top. Clicking on the company's name will take us to the equity's digital report, where the data, information, and analysis is arranged in more than 15 modules or boxes. These modules can be moved around, resized, and hidden so you can create your own customized stock report. So for instance, if the commentary is the first thing I want to see, you can just drag it right to the top. Or if you want to make the ranks box bigger, for instance, you just click on that rectangle. Once I alter the presentation to my liking, I can save the changes from the sliding horizontal action bar. The next time I come to this stock report, it will look the way I set it up. I can also apply these changes to other equities. I assume you are all familiar with Home Depot, but I will provide some details about the company and its scale of operations. This information is provided in the business description module. The Home Depot operates a chain of 2,286 retail building supply/home improvement warehouse stores across the U.S., Canada, and Mexico. The average store size exceeds 100,000 square feet and contains 35,000 products. The company employs more than 413,000 individuals, and its market capitalization exceeds $200 billion. Using the banner options at the top, let's take a quick look at how the stock has performed. The middle banner shows HD's 52-week high was $215 a share. It is now well off that level at just under $183. The analyst commentary should be able to tell us why, and for this I'm going to highlight Value Line's classic one-page reports. These are available to all digital subscribers and can be accessed via the PDF report section on the top right. In the commentary, Associate Research Director Matthew Spencer first discussed Home Depot's recent results, which were quite good. However, in his second paragraph, he talks about the stock. The good numbers did not ease the pressure on Home Depot stock. The equity has plunged nearly 20% since our September full-page report due to the sell-off in the broader market and concerns about housing specifically. These include rising interest rates and higher materials costs, partially due to tariffs, which resulted in several consecutive months of declines in new and existing home sales, though the latter turned slightly positive in October. That said, HD is executing well, supported by its investments in omni-channel selling capabilities, customer service, and efforts to court professionals. Rising wages, a strong labor market, and rebuilding efforts in the wake of recent natural disasters should also be supportive. Indeed, management's latest guidance calls for full-year fiscal 2018 sales growth of 7.2%, was 7%, comps of 5.5%, up from 5.3%, and share net of $9.75, previously was $9.42. Our earnings call is now a nickel higher at $9.80 a share. Please note that Home Depot is scheduled to release fiscal fourth quarter results in late February. As such, I think that Home Depot's price drop was largely unwarranted, and a favorable entry point now presents itself for a variety of investors. In fact, Mr. Spencer sums up his report with, despite the hurdles the retailer faces, we think it will continue to execute well. In fact, the recent quotation may entice conservative investors. Recovery potential is attractive, the stock is timely, and the dividend yield is above average. I'd also like to point out that in the meat of the presentation, in the financials, you'll notice that all the major figures are all marching upward at good paces. We truly believe Home Depot will continue to perform well over the years ahead and is a safe stock for conservative investors with a lot of upside. All told, Home Depot is today's one stock to buy right now. This marks the end of the formal presentation, and I will now tackle your questions. Please remember that I will provide information in regard to receiving an additional stock recommendation after the QA portion. Okay, at the last webinar, Value Line liked Verizon. Yeah, I highlighted Verizon in December. In light of this week's earnings announcement, does VL still recommend it? Well, let's take a look at our most recent supplementary report on Verizon. So for subscribers, these are posted as they're written throughout the day. Verizon reported earnings on the 29th. So I'm not going to obviously go through the whole report, but if you look at the investment advice, all told, this blue chip stock remains a good choice for conservative investors thanks to its impressive yield, high safety rank, and worthwhile capital appreciation potential 3 to 5 years hence. So we are still recommending Verizon, especially as a long-term conservative holding. Where do you find the screener criteria price appreciation potential? All right, let's go back to the screener. Remember what I mentioned? It's under Find Ideas. So we break appreciation potential up by the high and low bound, and it's these two fields. So for instance, and this is total return, so it includes dividends. But if you wanted to see, for instance, which stocks at minimum we thought were going to increase 10% a year out 3 to 5 years, you would type in 0.10. And there are 820 such stocks. All right, hold on, bear with me. Let's see if there's a few more questions. There's another question about how I chose Home Depot from the 10. So all 10 were very strong, as I mentioned. I just liked Home Depot's value a little bit better. I thought their prospects were good. Defensive nature was good. It just ticked a lot of boxes, but you certainly couldn't go wrong with any of the others. I also wanted to pick a stock that made sense in the calendar, obviously, with everything changing with earnings season. All right. Once identifying a stock such as Home Depot, how can you quickly access what Value Line might think of its competitors, such as Lowe's? Obviously, we could pull up Lowe's report, or better yet, using one of Value Line's tools, the watch list, we could create a watch list to look at Home Depot and Lowe's next to each other. So that's one way you can evaluate them right next to each other. You can see our proprietary ranks, obviously changes throughout the day. And of course, you can click on the company name and see that. What you can also do in the peers module, you can see how the stocks stack up versus its industry. Do you have a how-to guide on each section on the site? So we have several guides on how to use our products. They're all within the investment education section on the website. Tools and guides. And this will take you through how to use certain tools and navigation, as well as product guides for all of our products. I also would point out the glossary if there's a term you're not familiar with. Okay. Can you explain the timeliness ranking? Sure. One of the things that Value Line is most well known for is the timeliness ranks. The ranks are set at 1 to 5, 1 being best, 5 being worst. At any one time, there's only 100 ones and 100 fives. It's a bell curve. 300 twos and 300 fours, and roughly 700 to 900 threes. The calculation is purely quantitative, and it predicts relative stock action over the next 6 to 12 months. So we expect the ones to outperform the market and the fives to underperform, and so on. For more information, while I'm here in the guides, we have a whole guide that describes the system in more detail. Let me see what other questions we have. How is HD rated A++ when it has 95% debt to capital? Let's go back to the report. That is true. It has a high debt level, but that's mostly because shareholders' equity has decreased so much so over the years. We don't think Home Depot will have any trouble paying off its debt or generating more capital if it needs. The equity has come down so much because they have bought back so many shares outstanding. For instance, at the end of 2018, there are around 1.1 billion shares outstanding, when back 15 years ago they had twice as many shares, or over 1 billion more shares. So that's why that number is so high. But we don't think Home Depot is going to have any trouble covering their obligations. Does Value Line recommend stocks we should sell? Yes, in a few different ways. In our core reports, you can look at the analyst commentary. A lot of times we'll say, avoid this issue, take profits, things like that, stay on the sidelines. You can use the ranks. I just mentioned the timeless ranks. If something is ranked 5, we think it's going to lag the market. That's a pretty good indicator. Importantly, for people that want to be told what to buy, what to sell, and when, we have several products that do just that. Our monthly stock selection services like Select, Dividend Income and Growth, and Special Sit all recommend stocks every month and then tell you when it's time to sell. And that's usually done via email or phone message or both. So if any of those products interest you, I recommend calling 1-800-VALUE line for a free sample. All right, so there's a few more questions, so bear with me. Can data be downloaded into Excel for additional analysis? This can be done with higher level subscriptions. Our base subscriptions, the one, for instance, I was using today, exporting is not available. But if it's something you would want, we can provide it. Bear with me. There's a couple more questions. Can you explain the technical rank? Sure. So the technical rank works in a similar fashion as timeless. It's 1 to 5, 1 being best. But the calculation is only based on price action. It uses, I think it's at least 10 different durations looking at the price to then project what we think is going to happen over the next 3 to 6 months. So it's shorter term than timeless, and it only focuses on relative price action. That's also described in that ranking system guide. Here's a question about, do you provide analysis on preferred stocks? No, we don't cover preferreds. All right, there's actually a couple more questions that I'm not going to be able to get to. If you have a question, feel free to email it to me directly at igendler@valueline.com. That's the letter I, GENDLER @valueline.com. All right, that marks the end of the Q&A. As promised, Value Line is making available an extra recommendation of a stock that you can consider for purchase. It is only available if you call 1-800-VALUE-LINE and press 2 to speak to a Value Line representative. Please mention code 1901-BONUS. That's 1901-BONUS. You will also receive a bonus month of service if you choose to buy or renew any of our annual products. But no purchase is required for the bonus recommendation. All right, that's the end of the presentation. Thank you so much for joining me.